Hello and welcome. On this special edition on NDTV Profit, we're focusing on IPOs. The primary market has been robust and buoyant with a number of listings expected and IPO openings over the course of the next few weeks. We have with us Astha Jain, Senior Research Analyst at Securities, joining us. And she's been covering this for a pretty significant and long period of time. Astha, good morning. Thank you very much for joining us today. Astha, it's going to be a busy next few days for you, for your advice going on to your clients, and three big significant IPOs that will be, opening. And on the top of that list is Ola Electrical. What do you think? Will the electrical two-wheeler maker become a one-stop shop for the EV industry? Should investors be subscribing to this? You want to talk us through what your view is on the company and what one should be looking to do? That'll be the second part.
Right. Good afternoon. So yes, three IPOs we will be discussing today, and for your knowledge, two more IPOs will be opening next week. So really a busy week for the primary markets. Now talking about Ola Electric. Ola Electric is the leader in the two-wheeler electric vehicle space, as we all know, and it has a market share of 50%. This is the data which I'm giving right now as on March of FY24. So garnering the market share of 50%, Ola Electric is clearly a leader in the two-wheeler electric vehicle space. Now, talking about the issue, the most important highlight of this issue is that the issue size is big, but at the same time, what is worrisome about some of the investors is that the loss-making nature of the business. So as we see the financial performance of the company in the RHP, it is showing losses. So first of all, I will try to highlight and reduce the concern about this major part, since it is like a startup, because they have established this concern few years back, only maybe 4 or 5 years back. So it is into really initial stages, and that's why we are seeing EBITDA and the losses in the financials of the company. So what we are expecting this company to be in the profit is after a year or so, maybe 2 years down the line, by FY27, we can expect this company to be a profitable concern. And there are some major factors which we think will be helpful in making this profitability reality for the company. First of all, their product, because in any EV space, the major factor which drives the volume is the product, the kind of product which you are launching. So they are launching some of the very strong products, and that too in the motorcycle space. I would like to name the few of them: Diamond, Headstar. These are some of the names in which they will be launching their products in the motorcycle space. Secondly, they will be launching third generation platform products. So that will help the company in reducing the cost. So what we can see is that new product launches as well as third generation platform will help the company in showing profitability going ahead. And that is why we are positive on this IPO. We are recommending subscribe to this IPO, although this IPO is coming at the price to sales multiple of 6.7. Why I am taking price to sales multiple? Since EBITDA and the profitability level, the company is into the losses. So at price to sales multiple of 6.7 times, I think this company is a decent subscription candidate, and one can apply for this IPO. So limited listing gain and the long-term gains can be expected from this IPO. So our recommendation is subscribe to Ola Electric IPO with a limited listing gain, as well as long-term gains for this company can be expected.
Just a quick one, Asa. This is going to be the year's biggest D-Street debut in some sense, and it comes at a pretty big discount from what Ola Electrical had raised money a few months ago towards the end of last year. Assuming that there is going to be enough and more subscription coming in, it's going to be an oversubscribed issue. If investors who do not get it at the IPO price, would you still recommend it on listing day, even if there is a 20-30% gap up?
So actually, we are not expecting 20-30% gap up, although we are not, the right person to say something about the listing pop. But I think anywhere between 10% to 15% we can expect on listing, depending on the market condition also, because that can always be one of the caveat. So here we are expecting the listing to be in this range. Now, what to do if the company will list at these premium on which we are expecting the company to list at? I think one should wait for some downfall because if I can say 10 to 15%, then easily we are expecting around 10 rupees to 12 rupees of premium to this company on the listing day. So I think if this issue will be available anywhere at around 85 to 90 rupees after listing, then that will be a better entry point for this company in the secondary market if any investor want to make entry in. But investors should keep one thing in mind. One point in mind is that they should subscribe it for the long-term perspective, because as I told you, it is a long-term story. It will be profitable within the 2 year down the line on the basis of the factors which I've mentioned. And this EV story is really zooming up. We all know that the government is also after this. So definitely the company will be able to show strong financial performance going ahead. And some of the objects of the issue will also help the company in maintaining strong financial performance 2 years down the line. So I think all these factors are denoting towards the fact that it is a majorly a long-term story. But on the listing day, in any case, if the stock is available at around 80 to 85 zone, then one can also try to enter at those levels, but not beyond that. Because right now we should not forget the fact that company is a startup company and it is into the losses. So we should really give some time to see how the financial performance is going to be in the future ahead.
So don't do this for a trading day pop or listing day pop. Buy it for the long term is the advice coming out from Astha. Remember, the IPO opens on the 2nd of August, which is tomorrow, and closes on the 6th of August. The price band is 72 to 76 rupees a share, and it's a 5,500 crore IPO that will be opening in the grey market. It's already trading at a 15 to 20% premium. Well, let's move on to the other one that opened today, and that is Ceigall Infrastructure. You want to talk to me, Astha, about this one, because from what I understand, the subscription, it is open for subscription today, and investors can bid for this IPO till the 3rd of August. It's an infrastructure company, and the price band is in the 380 to 401 rupees. What is the view? Apply or not apply?
So this is basically an EPC player. They are into the roads, flyover over railways, bridges, etc. So in these activities, the company is presently into. So being an EPC player, what is attractive about this company is the growth, because they have shown very strong CAGR growth, not only in their top line, in their bottom line, as well as in their operating profits also. But the major concern or I think drawback to this company is that their valuation. Valuations are not very cheap. They are not at very reasonable levels. So it is commanding the PE multiple of around 23, which I think is at par, or it is something at the premium also to its peer. So our recommendation for this IPO is also subscribe, but for the limited listing gain, because the valuations are not very cheap at 401 rupees. But one major highlight about this company is also is their order book. Their order book is very strong, which is around 3.2 times of FY24 revenue. I mean, this type of book-to-bill ratio we hardly see in other EPC companies, because if we talk about the peers, their book-to-bill ratio is almost 2. But here, due to the strong order book, the book-to-bill ratio is almost 3 times, which is giving an edge to this company over its peers. And that is why this premium valuation can also be justified. But still, our stance is subscribe to this issue, but for very small listing gain and for the long-term purpose.
It's another long-term call coming out. Remember, they've been putting out a very impressive CAGR over the last couple of years on top and bottom line. But like Astha said, this is expensive. So you want to keep that in mind. And like she said, don't do this for a listing day pop. What you want to really do again here is, despite this being a profitable company, ride it for the long term. Remember, it's a preferred partner for NHAI in states like Delhi. So there's a lot going for the company, and that makes it a subscribe from Astha Jain. Astha, the other one that's got everybody's attention is the quieter one, the Akum Drugs IPO, which I believe closes today. Correct me if I'm wrong. But this one, of course, significant because you had a bunch of marquee investors who actually subscribed and invested in the company, including the likes of a BlackRock, Small Cap World Fund, Abu Dhabi Investment Authority, HSBC Global, among others, who were participating in the anchor round. Well priced in the contract manufacturing business. So all in all, good to go on Akum Drugs as well?
Yes, in fact, I'm giving subscribe rating to all the three IPOs, but in the end, if you permit me, I will also give the ranking also. So first at the top or at the last. So I think that will give the viewers the fair idea where to apply in case of the limited funds. So talking about Akums Drugs, yes, it is a leading CDMO, that is a contracts development and manufacturing organization, domestically focused with the market share of around 20%. So they have a strong market share. Major part of the revenue is coming from the CDMO business only. Now, the major highlight of this company is, first of all, the strong promoter base. Their promoters are very strong. I mean, the company was established way back in 2004, and they have a strong promoter base. Secondly, if I talk about their financials, again, if someone sees the RHP in the financials, the company has posted losses. So that can be concern for some of the readers of RHP, but here I would like to clarify that that loss is due to some fair value adjustment, and if we exclude those adjustments, the company is a profitable concern, and that is why we are recommending subscribe to this IPO. Decent listing gain and long-term purpose, both are the advice from our side, are the time horizon for this IPO that one can attribute to. So subscribe to Akums Drugs IPO for the decent listing gain as well as long-term purpose.
Right, in terms of ranking, what is your top pick, Astha? Because the pool of money is limited. If you had to, rank them for me, and if an investor to pick one out of the three, which one would it be?
So Akums Drugs. Akums Drugs is looking very strong, which will be closing today. So my advice is apply for Akums Drugs. In fact, I'm recommending to apply all three of them. But in case if anyone has to choose strictly one, or due to the limitation of the fund, then Akums Drug is the number one choice from my side, followed by Ola Electric, and third is Seagull. So I'm recommending subscribe to all these three IPOs. For Seagull, I can say small listing gain can be expected. For Ola also, I can say small, around 10 to 15% listing gain we can expect out of this counter. And for Akums Drug also, we are expecting decent listing gain. So first will be Akums Drugs, followed by Ola, and then Seagull.
Thank you very much, Asa. That actually sums it all up for us. Expect good listing gains and a great long-term stories. Akum Drugs, followed by Ceigall, and then Ola, and then Seagull Infrastructure, which we believe is a rather expensive IPO. But thank you, Astha. Great talking to you. Have a good day.